Hey everyone, welcome back to the channel. This is your weekly review for July 20th through 24th. Quick reminder before we start. This is educational. It's how I read the market with the Conflux method, not a signal service and not financial advice. Trading futures and options carries real risk, so take this as a walkthrough of my thinking. Let's get into it. First, a look back at last week, then the week ahead. Let's start with last week, which again turned out to be a good one for us. The week started with an excellent trade on GBP, where I managed to trade two zones from one to the other into longs and back into a short with a double reaction. In parallel with that, we had a trade running on the euro, which only worked out on the short side. The stop was deliberately moved behind the zone on the correlated asset, that is on GBP, and it worked out great. The zone on NQ also worked well, but I didn't trade it because I understood that NQ would go lower, and that's exactly how it turned out. The news background and the geopolitics didn't match a rise in NQ, so the trade was skipped. Through the week and toward the end, the euro gave a couple more entry points in the zones that formed as the week went on. When the CPI data came out, I simply sat it out because Bloomberg floated the idea that there would be a 0.4% drop in inflation for June. And that was too much, even if you assume there was no time lag from the effect of oil. And in the end, that's what we got with the decline. The painted data didn't give the market any positive. The market didn't believe the CPI report, and all the growth evaporated after the spurt. Without oil, judging by the report, inflation in the US is 0, and that's a fairy tale. For next week, the only driver that interests me is Friday. Everything else isn't interesting. Even the ECB won't be touching the rate there. Let's see whether there'll be a taco from Trump with Iran, and maybe we catch a trend on that. Or else we stay put and stand until July the 29th. Euro. Here an absolutely identical straddle went in, with the same break even as last week, and again on the boundary of the balance. And looking at these off-exchange trades, maybe they'll finally start pushing it up. And it's not only off-exchange. There's also an entry of 7,560 puts at the central strike in synthetics. And we haven't seen that kind of volume in a long time. And in July at that, and on the lower boundary of the balance. Let's see. The feeling is that they're just trading volatility and a shot, and where it goes, they don't care. And they've thrown hedges everywhere so they can easily flip to either side. If they go up, there's a synthetic break even. That is the middle of the two openings here. And on an exit above it, they earn until August 7th, and there's a strangle a bit higher. If they go down, they'll close all the futures. And with a break of the lower boundary of the balance, those same 7,560 puts will start earning all over again. In short, they're just waiting for a move and will adapt to it. And then they'll let us join. Given how long we've been standing in this accumulation, the exit out of it is a move of 300 to 400 points without long stops. So I don't want to buy it back yet until 1.1553 is worked, and possibly the break that follows, and I'll short only after a break of the 7,560 puts to the downside. Gold. Here we have a unique situation where all the delta hedge zones of the market maker and the funds, the Wednesday, the week, and the contract, landed on reaction level zones, and that in itself is a call to action off these zones. If the buyback off the visible ones continues, then through a pullback, I'll be looking at an entry into a buy toward max pain before expiration, off these two zones. At the open, if they immediately push it down to 4,047, I'll still try to buy it back. The stop is tiny for that kind of potential. So far, the buyback is fairly dumb, and the risk definitely shouldn't be raised above 1%. I've started glancing at crypto, but for now, it's only glancing. The coma there hasn't ended yet. That's the plan for the week. Remember, these are zones and scenarios I'm watching. The market decides, not me. So let price come to your levels and let the confirmations line up before you act. If this breakdown was useful, subscribe and turn on notifications so you don't miss the next weekly review, and drop a comment with the instrument you want me to cover. And one more time, so we're clear, none of this is financial advice. I don't sell signals and I don't promise profits. This is educational content about the Conflux method, and everything here is my own view of the market. Trading futures and options involves a substantial risk of loss, so never risk money you can't afford to lose, and always do your own analysis. Take care, manage your risk, and I'll see you in the next one.